Hello, everybody, and welcome back to another episode. So the stock market completely collapsed today. The worst day since, I believe, June 2020 for most of the indexes. NASDAQ down almost 30%. S&P down almost 20% until now, so year to date. It sucks. The craziest thing is, Tuesday and Monday, we actually had a rebound, or what you would call a dead cow bounce, maybe. The thing that scares us the most, Walmart misses and Target gets shellacked today. Target is talking about costs of goods and shipping costs and inflation costs, and they're just not good. Target, Walmart, two of the best, if not the best, retail stores out there. Amazon, shellacked. Up there with Target and Walmart. Definitely the number one internet, e-commerce business. Shellacked. Inflation's here. We know this. That's nothing new, right? Inflation is here. This we know. But we never assumed that companies like Target or Walmart get shellacked like this. I mean, Target is down 25%, and I don't mean to laugh. I just can't cry anymore. I never thought Walmart was going to miss. If you watch my videos for the last 6 months, year when this thing started, I always said Walmart is a safe bet. In good times and bad times, it's an inflation proof. Well, I was wrong on that. Walmart got shellacked. What's going to happen next? We're going to go a little lower. And by a little, I have no idea what that little is going to be. Interesting thing. There is a correlation between employment or lack thereof, i.e. unemployment, and inflation. When everybody's employed, people have money and they're spending money. When people are unemployed, they have a lack of finances, so they're spending less money. One way to reduce inflation is to reduce the demand. How do you reduce demand? Less money in the economy. Well, what's the best way to reduce the amount of money in the economy? Unemployment, unfortunately. Target is going to lay people off. Walmart's going to lay people off. And a lot of other big box retailers are going to lay people off. And then it's going to trickle down. So it seems like there's a lack of spending as well. So people see that inflation is here. And whatever money they have in their pocket, they don't want to spend. Things suck. I'm not going to lie to you. It absolutely sucks. And everywhere you go, you see people now only start worrying. The thing is, there's a delay. People don't like to look in advance. People don't like to see what's going to happen in the future. And people look right now. You can't time the market. I'm going to keep saying this again and again and again. However, after today, I might want to stop in buying these dips because I don't know when this dip actually ends. That's the truth. I still say that we can see another 10 or 15% drop, which is what I said yesterday in my video. And if it goes much lower than that, man, we got big problems in the economy. We got big problems in this world. But I honestly do think we did reach an inflection point with inflation. From 8.1, it went down to 8.3. I think our next report, and this next report cannot come soon enough. I'm almost excited to see the CPI report because I'm theorizing that is going to drop, and hopefully it's going to go to 8% or 7.9%. And as long as it's going down, that's good. That means everything's working. Forget about what the Fed is doing with raising the 50 basis points. That's going to happen. The Fed's going to raise 50 basis points next meeting, 50 basis points the next meeting, and I'm almost positive at least 50 basis points for the next 3 meetings. If we have 50 basis points for 3 meetings, that's actually going to be a positive thing, as crazy as that sounds, for the stock market and for the entire crypto market. If we get anything more aggressive, going to tank the market. But, like I said, I think we really did see an inflection point of inflation. I also think that a lot of people are going to start getting fired. And although I don't wish that upon anybody, let's just be honest, that is also going to reduce the amount of inflation in the market. It's just a fact. If you have less money, you spend less money. If you spend less money or not willing to spend as much money, that means the demand dries up. And if the demand dries up, the prices must fall. Supply and demand, plain and simple. That's why during COVID, everybody got these bailouts of $1,400 checks multiple times, and everybody took out these crazy SBA loans that they didn't need for hundreds of thousands of dollars, $1 million, and they bought nonsense, absolute garbage. So it doesn't just go from low income, it goes to high income too. People were just spending crazy money for stupid shit that they didn't need. And this inflated the prices. Well, that's stopping right now, and you can see it. You can look around and you're seeing it. The thing is, if you try to time the market, just like I said, people don't realize what's happening in advance. Just like right now, we are in a recession, but you're only going to know about it in the third quarter, because third quarter reports second quarter reports first quarter, just like CPI data in June is actually going to give us May data, and May CPI report, which we just had, gave us April data. So we're always a month or two or three behind, a month to a quarter behind, let's say. People that try to time the market, by the time the market is going to start being bullish and by the time the market starts jumping up, are going to miss the boat. And although you can't get the bottom, you can get the wave, right? So you can't hit this point, but you can possibly hit one of these points, right? Something like that. And if people are waiting to buy and they're sitting out, and I'm not going to use myself as an example because I've been buying this whole time. I'm just going to sit out right now because I have my positions. I am dollar cost averaging, and I actually did take out from certain positions like my crypto because I still think Bitcoin's going to hit 25,000, and it looks like it is going to hit 25,000. I was able to sell 3.7 Bitcoin at 36,000. I took that money. I put in a buy order for Bitcoin for 4 Bitcoins actually for 25,000, and I actually changed it now. I have 2 Bitcoins for 25,000, and the rest of the money I used to pay off some margin. I used as collateral, so I have money in my bank account in case I need that money because I don't know what's going to happen with this economy. And I'm buying up shares of stocks that have high conviction and shares of stocks that I didn't get a big enough position for. For example, Tesla. I am buying more shares of Tesla because I think Tesla is going to recover, and I do think Tesla is going to 5, 6, 7x from here in the future. But you got to be wary of the prices right now. Also, for cryptocurrency, I will rebuy Bitcoin, but instead of 4 Bitcoins, I'm going to buy 2 Bitcoins. I haven't placed an order for 25,000 each. And the rest of the money, besides for reserves, I am going to be using to buy up Algorand. I'm probably going to do a buy order for $200 a day over the next 30 days, which is going to be around $6,000. And then I'm going to probably revisit this strategy. I don't know if it's going to be right or wrong, but that's what I thought of. Because again, you cannot time this market, not the bottom and not the top. And if you try, you're going to miss the boat. Literally, you're going to show up with your ticket and the boat has already left. And you're going to be ASS out. So this is what's happening right now. Unemployment, bad. But you hear what Jerome Powell always says. He says, we're going to raise the interest rates to curb inflation, and we believe that our economy could take it because of our unemployment. Unemployment is near record lows, 3.6%. I think record low is like 3.5 or something like this. And the job market, supply and demand. There is demand for 1.9 positions for every position that's available. The supply is 1 position, 1 employee for 1.9 employee demand. If that goes down, then Jerome Powell is going to start thinking twice about raising the interest rates. The thing is, like I said, for every percent you raise the interest rates, that's a $300 billion burden on the United States national debt repayment. So it's a very fine line. Guys, I hope you like this update. This is a very nonchalant. I'm just keeping you guys informed and appraised of the entire situation. A lot of you guys don't have time to read the news. It's my job to read the news. I'm a full-time YouTuber. As you know, I quit my own business and I don't regret it. A lot of people are like, oh, Adam, the market sucks. Do you regret it? Nope. I started my business in 2008. My first business in 2008, the one that I just quit. And that was a very bad time, if you remember. I remember February 2008. Terrible time. But I started it and I made it a successful 7-figure business. You know, I was never, it's not like multiple 7 figures, but it was in the over 7 figures I was bringing in. So it's all good. Guys, follow your dreams, do what you got to do, be careful, you know, make sure you get your six, but at the same time, as they always say in Russian, тот, кто не рискует, не пьет шампанское. The person that makes no risks is not going to drink the champagne. So you can't blow up and be scared, because the market will get ahead of you, and then you're going to miss out again. None of this is financial advice, purely entertainment and educational purposes only. Do your own research. Happy tradings. Best of luck. And before you run away, give me the likes, the shares, and the subscribe. I'm trying really, really hard to grow this YouTube business. I love you all. Good luck.